All right, how's everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be continuing the crypto series with part 19. Now, I think what has gotten interesting, if anybody is following the crypto series or watched the last few episodes of it, usually I try to focus these episodes on one particular aspect of the crypto market or the crypto industry, if you will. The last few episodes, though, what's fascinating right now is that there is so much happening in terms of regulation and what companies are doing and just different players doing different things out there in this particular space that these episodes are because I'm presenting a lot of information. As in today's episode, we're gonna give a lot. I'm gonna give you guys a lot of information on what some of the companies are doing, reports from the Treasury, what are all the different regulatory updates as far as the FDIC and the SEC basically backing off on some of their crypto standards, if you will, and then also the proposal of new legislation. So we got a lot to talk about. So let's jump in. I'm going to give you guys a couple things right here to kind of whet your appetite here today as we move through some of these things. So Morgan Stanley planning to add crypto trading to the E-Trade platform, the report says. So Morgan Stanley executives are looking into adding spot cryptocurrency trading to its E-Trade platform sometime next year. Bloomberg News reported Bitcoin hit its highest price since late February following the report, and the report comes as regulators under the Trump administration have shifted to a softer stance on crypto enforcement. So very interesting there. So Morgan Stanley, again, through the E-Trade platform, looking to add crypto trading. And then we see here from the CNBC article that SOFI CEO says fintech bank is bringing back crypto investing. So SoFi CEO Anthony Noto said the fintech bank will bring back cryptocurrency investing after a fundamental shift in the regulatory landscape under the Trump administration. SoFi was forced to drop crypto investing in late 2023 as part of becoming a regulated bank. But after new guidance this year from the acting head of the Office of the Comptroller of the Currency, otherwise known as the OCC, the technology company is planning to basically be aggressive pushback into crypto. Noto told NBC late Monday in an interview. So very interesting. So the CEO said the fintech bank will bring back cryptocurrency investing this year after this fundamental shift. But after new guidance from the OCC, the technology company is planning on aggressive pushback into crypto. We're going to re-enter the crypto business, which we had to exit. We'll re-enter the business of allowing our members to invest in cryptocurrency. We want to actually make a bigger, more comprehensive push into cryptocurrency, this time to include really providing crypto or blockchain capabilities in each product area that we have. The SoFi announcement is early proof that banks are looking to push further into crypto in the Trump era. I'm going to get back into that in just a minute. But in January, the CEOs of Bank of America and Morgan Stanley said their institutions were ready to get involved in crypto. At the same time, crypto firms, including Circle and BitGo, are planning to apply for bank charters or licenses, further blurring the lines between traditional and digital finance. I'm going to get, again, I've got a couple articles related to that. I'm going to get into that in just a second. Now we jump into this couple articles here from the Wall Street Journal. So the first one up is Trump 2.0 era brings a flurry of crypto deals. So companies seek to capitalize on lighter regulation and growing mainstream interest. So President Trump's embrace of digital currencies has unleashed a flurry of crypto deals, with companies seeking to capitalize on lighter U.S. regulation and what they will hope will be growing mainstream interest in the sector. This week brought the debut of 21 Capital, a new Bitcoin company that plans to go public through a $3.6 billion merger with a special purpose acquisition company led by Brandon Lutnick, son of Commerce Secretary and close Trump confidant Howard Lutnick. With deep-pocketed backers such as Tether and Japan's SoftBank Group, 21 plans to amass billions of dollars of Bitcoin and issue debt to acquire more, a highly speculative business model pioneered by software maker turned Bitcoin investor MicroStrategy. Michael Saylor, yes, over at MicroStrategy. We could have a whole different conversation just on MicroStrategy, but we'll leave that one for another episode. But I guess this 21 is planning on doing the same thing. So the 21 merger is the third crypto deal valued at more than $1 billion to be announced in less than 2 months. It comes as deal makers more deal making has broadly slowed down because of market volatility. Earlier this month, Ripple agreed to acquire prime broker Hidden Road for $1.25 billion, betting that institutional investors will want to step up their exposure to crypto. And digital currency exchange Kraken struck a $1.5 billion deal with futures broker NinjaTrader in March, one of the biggest tie-ups to date between trading platforms and crypto and traditional assets. Meanwhile, Galaxy Digital is planning a mid-May direct listing on the NASDAQ after the Securities and Exchange Commission gave it a long-awaited green light. The crypto financial services company, currently listed on the Toronto Stock Exchange, has been trying to secure a U.S. listing since 2021. It will continue to be listed in Toronto after the NASDAQ listing. In all, crypto firms have struck 88 deals with a total transaction value of $8.2 billion so far this year, according to data from advisory firm Architect Partners. That is nearly triple the transaction value from 188 deals in the industry in all of 2024, the data shows. And then we can see this chart here. Crypto deals, yearly transaction value. Obviously, 2021 was the big deal before we had the crypto winter in 2022 with the implosion of FTX. But we can see here in 2025, we're already having a huge year. I would suspect that by the end of this year, this deal value will surpass the $17 billion from 2021. That would just be my guess, considering the fact that we're basically halfway there. We're only through the first quarter of the year. So, and again, the article goes to say that, hey, there's all this optimism. Again, looking at different things, but like I said, we'll go on. We'll look at some of this other stuff now. Crypto knocks on the door of a banking world that shut it out. So Circle, BitGo, and other crypto firms plan to apply for bank charters or licenses. So Trump's pro-crypto stance is encouraging crypto firms to seek bank charters and licenses. Proposed legislation aims to establish a regulatory framework for stablecoins. Some banks are looking to forge ties with the industry, while others remain cautious due to regulatory concerns. So crypto is pushing deeper into the banking system. So a regulatory crackdown on crypto in the wake of the meltdown of FTX and two crypto-friendly banks prompted some in traditional finance to break up with the industry 2 years ago. Now, President Trump's pledge to make America a Bitcoin superpower has set the stage for crypto to become more intertwined with the banking system. A host of crypto firms, including Circle and BitGo, plan to apply for bank charters or licenses, according to people familiar with the matter. Crypto exchange Coinbase Global and stablecoin company Paxos are considering similar moves, other people said. That comes as the Trump administration moves to incorporate crypto into mainstream finance, and Congress advances a pair of bills that would establish a regulatory framework for stablecoins, which let people easily trade in and out of more volatile cryptocurrencies. The legislation would require stablecoin issuers to have charters or licenses from regulators. Some crypto firms are interested in national trust or industrial bank charters that would enable them to operate more like traditional lenders, such as by taking deposits and making loans. Others are after relatively narrow licenses that would allow them to issue a stable coin. So, right off the bat, this is all going to be a big issue. I find it fascinating that on the one hand, like ICBA, Pennsylvania Bankers Association, they're not Pennsylvania, the American Bankers Association, these guys are pushing for crypto regulation around stablecoin, which is great. I'm not a fan of this, though. I am not a fan of these crypto companies getting bank charters, specifically using something called the ILC, the Industrial Loan Charter, which has been a boogeyman in the banking industry. I just did another episode on that just a few weeks ago, if you want to go check that out, to understand a little bit more about the ILC charter and the background there. But that's going to be, I think, a no-go for a lot of people in the banking business. And I think they're going to come out and say, hey, listen, if BitGo or Ripple or these companies, if they want to be a bank and they want to get a bank charter, that's fine. They need to get a normal bank charter and be subject to all the regulation that everybody else is subject to. Which again, I think that there's going to be a lot more happening around a lot of this. But just to show you, what's going on. World Liberty Financial, the Trump family's crypto project, unveiled plans to launch a stablecoin called USD1 last month. It said the stablecoin's reserves would be safeguarded by crypto custodian BitGo, which is getting close to submitting the bank charter application. People familiar with the matter said any crypto firm that obtains a bank charter would become subject to stricter regulatory oversight. Anchorage Digital, so far the only crypto firm in the country with a federal bank charter, said it spent tens of millions of dollars to comply with regulations. Yes, as it should, as everyone else does. In 2022, a bank regulator issued a consent order against Anchorage, pointing to anti-money laundering deficiencies. It has not been easy, said Nathan McCauley, chief executive officer of Anchorage, which obtained its charter in 2021. But he said the whole gamut of regulatory and compliance obligations that banks have can be intertwined with the crypto industry. Again, yeah, I'm not super crazy about all this, as you might tell. But okay, now before we get into the next part, let me just read you guys some of the headlines here, and then we're going to go back to a couple final things. So, SEC Chair Commissioner push for rational crypto framework. In his first public comment since being sworn in as the Securities and Exchange Commission chair, Paul Atkins said he looks forward to working with market participants, the administration, and Congress to establish a rational, fit for purpose regulatory framework for crypto assets. In the meeting of the SEC's Crypto Task Force, Commissioner Caroline Crenshaw also challenged the panel to think through issues that could weaken investor protection, saying trust is particularly important in our relationships with financial institutions. That is why our custody regulations are so important. So the FDIC, the Fed, they joined the OCC in rescinding guidance on crypto activities. So the FDIC and the Federal Reserve Board announced the withdrawal of several statements regarding banking organizations' crypto asset-related activities. So the FDIC and the Fed withdrew two joint statements released in January and February of 2023 that addressed crypto asset risks and liquidity risks to banking organizations resulting from crypto asset market vulnerabilities. The agency says the action is intended to provide clarity that banking organizations may engage in permissible crypto asset activities and provide products and services to persons and firms engaged in crypto asset related activities consistent with safety and soundness and applicable laws and regulations. The Fed separately said in its rescinding its 2022 supervisory letter establishing an expectation that state member banks provide advance notification of planned or current crypto asset activities, meaning the Fed board will no longer expect banks to provide notification and will instead monitor banks' crypto asset activities through the normal supervisory process. Its 2023 supervisory letter regarding the supervisory non-objection process for state member banks' engagement in dollar token activities. So this is huge. This is huge. This is monumental. ICBA applauds House panel for advancing anti-CBDC bills. So the Anti-Central Bank Digital Currency Surveillance State Act, H.R. 1990, House Majority Whip Tom Emmer's bill to bar the Federal Reserve from issuing a U.S. central bank digital currency to consumers. Love that. Hope that goes through, and we shall see what happens. The ICBA outlines community bank priorities for stablecoin legislation. So as Congress works to advance legislation to establish a regulatory framework for payment stablecoins, ICBA offers an issue brief with updates on the status of current legislation, as well as ICBA's key priorities and continued engagement. The issue brief offers insights on the expected passage this year of bipartisan legislation that would establish a regulatory framework for stablecoins, a currently unregulated market. So what are some of the latest developments there? Well, the House Financial Services Committee Chairman French Hill and House Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee Chairman Brian Steele last week introduced the Stable Act, which is scheduled to be voted on by the committee this week. The Senate Banking Committee recently passed its stablecoin bill called the Genius Act by a bipartisan vote of 18-6, with changes addressing some of ICBA's key issues. So ICBA continues to advocate for these key issues to protect economic stability and preserve the vital role of community banks. So what do they want? So they're looking for non-bank issuers should not be granted Federal Reserve master accounts. Community banks must be permitted to use stablecoin reserve funds held as demand deposits for lending. Big tech or other commercial firms must not be allowed to leverage their reach over consumers to dominate the payments industry by issuing stablecoins or affiliated with stablecoin issuers. There should be a defined federal floor for regulatory standards that applies to all issuers. So again, I think those are all good things. House panel taking up bill to establish stablecoin regulatory framework. So at tomorrow's House Financial Services Committee markup, lawmakers are set to take up legislation to establish a federal supervisory framework for stablecoins and their issuers. So the Stablecoin Transparency and Accountability for a Better Ledger Economy, the Stable Act of 2025, was introduced by House Financial Services Committee Chairman French Hill. And so the markup of the Stable Act follows the Senate Banking Committee's recent passage again of the Genius Act. So we will continue to watch these two bills. The bill to establish stablecoin regulatory framework, it passes the House committee. So the Stable Act passed through the House committee, and now we're going to see what happens. Now, I will have some more information on that. And I will bring that more to you guys in another episode. But okay, well, let's continue on. Let's get back to these articles here. I just have a couple of more things to share with you guys. So again, FCC, this article, I'll show you guys, this is a small article, but it just says the FDIC permits banks to engage in crypto-related activities without prior approval. Here was the actual notification from the FDIC. So notification of engaging in crypto-related activities. So all FDIC supervised institutions that intend to engage in or that are currently engaged in any activities involving or related to crypto assets, also referred to as digital assets, should notify the FDIC. FDIC supervised institutions are requested to provide information described in this letter. The FDIC will review the information and provide relevant supervisory feedback. And then it goes through all the highlights there. So again, this is huge, huge stuff here. So, and then I think the last thing I had to share was this article here from Zero Hedge. And this was on a report that was just put out by the U.S. Treasury. And I'm going to cover this report in more detail, but it'd take a whole episode to kind of go through all that. But basically, this says stable coins are on track for $2 trillion market cap by 2028, as per the U.S. Treasury. So U.S. dollar peg stable coins are on track to reach an aggregate market capitalization of approximately $2 trillion by 2028, according to the United States Department of the Treasury's first quarter 2025 report. So stablecoins' cumulative market cap currently stands at roughly $230 billion, but evolving market dynamics have the potential to accelerate stablecoins' trajectory to reach $2 trillion in market cap by 2028, the Treasury said in the April 30th report. A stable coin, again, is a cryptocurrency whose value is pegged to a traditional asset like the US dollar. According to the report, such tokens are already ubiquitously utilized as cash on chain, effectively serving as a new payment mechanism. Additionally, the emergence of tokenized money market funds has recently created an alternative option to stablecoins, primarily given their yield-bearing feature. And then this is kind of, if you could see here from this chart, this is kind of the complicated stuff that's in this report that would take a little while to go through, and it has some great charts in there. So and then it talks about embracing tokenization, current state of the stablecoin market, and then it kind of just wraps up with and then I'll read this bit. As of April 25th, Tether USDT is the dominant stablecoin, commanding approximately 66% of market share, according to a report by researcher Nansen. So again, this is fascinating here. So a lot of stuff happening in the crypto space, and it's happening incredibly rapidly. A lot of regulatory updates. We will see if the Stable Act and the Genius Act, if they do get through both houses of Congress, obviously part of the legislation package that President Trump is really pushing for. We've got a lot of companies basically dipping their toe, Morgan Stanley, SOFI. I'm sure there will be many more to follow. That I'm sure, PayPal, Block, a lot of these companies won't be far behind. They're basically dipping their toes back into the cryptocurrency space. A lot of these companies like Ripple and BitGo looking to get bank charters, looking to really explode, their business. And obviously the SEC and now the regulators really getting out of banks' ways if banks want to get into the business or offer different types of cryptocurrency services. So, a lot of crazy. This stuff is really starting to pick up steam here in the last 2 months. So undoubtedly, a lot of stuff will be coming. I'll be doing the next crypto episode, which will come out next week, will be a feature of that Treasury report that I just mentioned. I'll get into that in much more detail if anybody's interested in looking at. And I will obviously keep everybody very updated in future installments of the crypto series as we continue to follow the legislation and just these updates in the general market on what is going on and what happens with crypto and how it ultimately affects banks and whether banks do or do not go into this full bore. So we shall see what happens. But to wrap up, if you like this information, if you're loving the crypto series, please make sure to like, share, and subscribe, as that really helps the channel. Please leave your comments down below, as I always love getting back to everybody. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to check out some of the other content on the channel. And as always, remember, BND Strategy Room, which is the live stream show of the channel that is on every Saturday night, 8 p.m. live on YouTube. Please come and check it out. I cover all the news of the week. We talk about economic indicators, what's going on in banking, what's going on in finance, maybe latest technology trends affecting the finance world. So a lot of great things covered in there. Hope everybody tunes in to check it out. Other than that, I hope everybody has an awesome day out there, and I will see everyone again real soon. Thanks a lot.